Richfield here, coming to you live from London. It's just gone 1 p.m. here, which makes it midday UTC. How's everyone doing? Big shout out to everybody joining the stream live today, as well as everybody that is watching this on recording. Do let me know in the comments if we've got any issues with the sound or with the visuals at all. Do let me know. If not, we are going to crack on. We're going to take a look at Bitcoin, and then we're going to make some time to look at some alt requests. Had some really good questions come in at the Nest Club and also on Twitter for some options. So we're going to look at some of those towards the end. So do make sure to pop those in the chat, and then I am going to make a note of them for you. So I wanted to open by taking a look at the trade that we took together at the Nest yesterday that I posted out. I put it on Twitter as well in its kind of core concept. So I had a lot of questions about it. We got to our first target, price retraced overnight, took out a stop loss this morning, which was at entry. But overall, quite a nice trade. Hit all of our parameters. We entered it at the right time, right kind of factors. And I got a lot of questions about it, and some really good questions as well. So I just wanted to kind of focus on running through that with everyone, and then we can take a closer look at some alts. All right. So do let me know if there's any issues with anything in the audio or anything with the visuals. And if not, then we're going to crack on. So where are we? I've just got this on the daily at the moment, just showing the fair value gap here, right? So I've highlighted this in this grey box in terms of what was making me think when we came down here, we ran these lows, right? And we had relatively equal lows here as well. We came in, we got this huge bullish reaction here on the daily. And this is what had me feeling a little bit bullish. There we go. Hey, Imran Khan, good to see you, buddy. Thanks for joining the stream. I haven't forgotten about your requests, but pop them back in later and we will take a look, my friend. So when we're looking at candle patterns, right, and obviously daily, weekly, anything we're on the higher time frame, we take more weight from those than anything, obviously, on the lower time frames, right? Cheers, buddy. Everything is good. Awesome. So sound and visuals are fine. So when we're getting these long downside wicks, what this is showing us is that price is getting bought up here, right? So we get this big, beautiful hammer candle here, right? But then we get to the upside, we see the sell pressure come in as well, right? And we've got the downside wick. So there's a little bit of uncertainty as we're coming through here. However, what we're saying to ourselves, what we're always saying to ourselves is, where's the biggest magnet for price, right? Price is purely hunting for liquidity. Where are we looking for liquidity? We're looking for high time frame or medium time frame fair value gaps, right? Or inefficiencies, these, right? It's when the price in the market moves down aggressively or up aggressively, as we get here, and we leave these gaps from this candle's wick to this candle. There's no overlap, right? It's an inefficient move. And the market, more often than not, wants to fill these inefficiencies, all right? So we can see as we had this move up here, left this inefficiency or fair value gap, we then come back down to fill that here, yeah? So then the theory is that if we're taking out these lows down here and we just can't find sellers below it, then the chances are that price is going to look for liquidity higher up, right? So I left this line on here as well, this green line that I'll move back just a little bit so you guys can see what is written on there. So that's BSL, all right? Buy side liquidity. SSL is sell side liquidity, all right? So these are, for anybody that doesn't know, these are mostly ICT concepts who I was very, very fortunate to study many years ago and still continue to do so now. Really kind of the creator and the godfather, if you like, for want of a better term, of smart money concepts, right? So how price is being moved around by algorithms and institutions. The other person, amongst many that I've learned from, that I take, you know, most of my teaching from is SZ, all right, and obviously EXO as well. So I'm looking at this purely from a price action perspective, right? Yes, I'm going to factor in key news events if they're coming up, always aware of those, and we always share them at the Nest. But for me, I'm looking purely what the charts are saying, all right, or what they're showing us. And what they're showing us down here, right, is that buyers are stepping in, or that price is getting bought up. It's moving higher, all right? So even though we're here on this time frame, you know, it's difficult kind of structure when we look at it. When price took out these highs here, these equal highs, right, we had this big bullish engulfing candle, right? So I consider engulfing candles, by the way, based on the volume of the bodies. If we were to take out this in terms of the wicks as well, then that would be an outside bar, all right, or outside day, which is normally a reversal candle. So before I digress, we had this bullish move up. Now, a lot of people were saying, isn't it too late to step in here? Well, no, not for me, because where we've come up to here, we've got this bullish move. What we want to see is this price open, trade a little bit below it, and then push higher, right? Because we've got clear upside targets here with these highs, and we've got the fair value gap, right? So we're expecting price to rebalance this. Now, we don't know to what point. We target the equilibrium typically, which is our 50%, right? Which is where I want to see it move into first. So that's why we had that as our take profit target, all right? And we can see price came in and tagged that quite nicely. However, we need to drop down onto the lower time frames, obviously, to get a little bit of a better look on this. Jay Showman, hey buddy, how's tricks in South Africa? All good, I hope. I bet the weather is a bit bloody nicer than it is over here in London. So the other thing that I've got on here, guys, is my session breaks. I'm going to turn that off at the moment, but for those of you that don't trade these, session breaks give us a really, really good understanding of the prior day's trading, right? So what we would typically do is we would look to Monday to set our range, all right? I'll tell you this just quickly before I get rid of these. So we would take Monday's high, right? And then we would also take Monday's low. Makes our Monday's range. What are we looking for? Like we're doing when we're trading any kind of range, is we're looking for price to break out. If it then comes back within, we treat it as a deviation. It trades lower. If, however, we have these impulsive moves higher, then we can look for breakout opportunities as long as we've got a clear upside target to the left. All right. So just as a little bit of context there, but I'm going to turn them off at the moment to keep it clean. All right. So we can also see down here we had prior day's high and prior day's low selected too. So what happened here? We came up into this buy side liquidity, right? And this is the trade, right? Which we'll break down on the lower time frames. Now, when we had this, which was the prior day's high, which is labeled up PDH, we've got the fair value gap above it. I want to see how price moves into this level, right? Now, if we get a little bit of a weak reaction here and we kind of chop around a bit, then I would expect a rejection. However, when you see a big impulsive move like this, yeah, offering a lot of displacement, as ICT would say, you want to see an aggressive punch through the move, yeah, aggression. That's what you want to see, something that's telling you that the algorithm's kicked in and it's induced the buying, or that you've got the buyers stepping in here, right, however you want to consider it. Well, then what are we looking for? Well, quite simply, we leave this fair value gap, which I've highlighted here in this blue box, right? That's the gap between this wick here and this wick here. So what we've then done is mark our range, all right? So we've just simply taken this move, the low to the high, right? Which I'll show you in a little bit more detail on our 15-minute chart. Then we have our equilibrium, can't even speak, equilibrium, right? Which is our 0.5, our 50% level. Now, the way we think of this is this zone down here is our discount and this is our premium. So if we want to go long, we want to be longing from a discount, yeah? If we're longing from up here, we have to expect shorter potential upside targets and therefore higher risk. So what we've also got below this 50 line is this fair value gap. So what we then want to do is pop onto our 15-minute chart, or not what we want to do, but how I look at it, certainly. Now I'm on here. We can see the low here. We can see the high, right? Because simply we've come up here, we've broken structure here. So this is the origin of the move, which has then broken the structure to the upside. And this is the move before we then broke structure to the downside. We've pulled into our fair value gap here, right? And we've also pulled in to our discount. Now, for me, I want to see a break of market structure to the upside. Which we get here. Price comes down, takes out these lows. There's our liquidity sweep, right? And when does this happen? This happens in the beautiful period over the crossover between the London session and the New York session, right? That's our key area to trade. Now, price comes and sets this low within our fair value gap. Price runs that low, taking the sell side liquidity below. Now, price then comes up and takes out, closes above this high here. I then set a limit order on this breaker line, as I call it, and as price moved away from it here, it came back, tagged us into our trade. Our stop loss goes below the prior low, all right? And then what we're targeting up here excuse me, is we've got our 50% of our move here. So we want to take just a little bit off of that, just shy. So with the group, we scaled out here, but we still left some in, right? Because we've got a clear upside target up here, right? The high end of the fair value gap if it was going to fill it up higher, all right? So we don't want to take out completely, but we take off the trade quite heavily here and leave some in ready to run. It didn't. We got stopped out of the trade today, right? Not a problem. Took a lovely amount of profit on it. And it was entered with really, really good understanding of risk. You know, we're 2R at this point. But one thing I just want to show you quickly, people were saying how I got that upside target. So I was taking a 50% measurement of the move. But the reason we scaled out slightly before that was because, and I'm taking our trend-based fib extension here, all right? From the origin of this move up to here, and then down to the origin of the pump. And we're looking to get a 1-to-1, yeah? So we get our 1 there. So we're saying as a first viable target, that was a really nice place to take profit. As ICT teachers and other great price action traders, you want to be aiming for low-hanging fruit, right? The easy targets first. Take your wins, take them little, take them off, and make sure you've got your risk management in place. Trading is very much a game of time, okay? So, hey, Carlos from Luxembourg. Hey, buddy, thanks for joining the stream. And Jay Showman, sunny skies and surfs up. Oh, man. Showman is from South Africa, one of my favourite countries in the world. Lovely people, amazing, just wild, rugged landscape. And if you're into your diving like I am, then just some of the best shark diving you could ever wish for. So before I digress too much, I hope that kind of explains my thoughts on why we took that trade. All right. And we took that with the group and made some nice profits. We left some in to ride for target 2 up here. All right. We got out just around about 2R. And then we were aiming for this one up here, which is a slight extension around about 4.3. We moved our stops to entry when we took our initial target, all right, and we just kind of tagged them out this morning, which is fine. If we now, however, zoom back out a little bit, remembering we don't want to get caught up too much on our lower time frames, all right, guys? And I'm just going to get rid of these just to clean this up a little bit. All right, now what we can see is we've come into this inefficiency, right? This fair value gap, the daily one here. So now what we're asking ourselves is, what's price going to do now? Now, there's this really cool indicator that you can get. You need to do a little bit of tweaking with it. I'm really awful with technical stuff, guys. Anybody at the Nest will tell you I'm an absolute joke. I probably was made for paper trading days, to be honest, and not paper trading as in not putting money into, but literally when they were writing these things on tickets. So I'm always having technical issues. I'm just going to pour my tea a second. Very British of me. Great suggestion from someone yesterday on the stream, or a day before, sorry, saying I should have that as my intro music, the sound of tea being poured. So, look, this indicator is called KZ/daily/TDOL, right? That is available on TradingView. What it allows you to do is program in, the different days, and then along here, the timings of different sessions. So for me, I want to know the London zone, the kill zone for New York as well, which these are, I'd imagine, been created by an ICT student because that's what he refers to them as. So it basically just highlights key times of day that we want to trade. And I very much base my trading around that. So this section here, the purple to the blue, all right, for me here in London time, we're looking at this being midday through till 4 p.m., all right? And that for me covers the London session when it crosses over with New York. And what we can see here is in these sessions, we often get these really nice moves, all right? Obviously, weekends are slightly different as well. But when you kind of trace this back, and especially if you're looking at it on a lower time frame, look, as we come up into here, start of the London session drives up in here into New York. New York has this big sell-off down here. All right, okay, we consolidate here, but what we can see is price pushes up, takes out the London highs here in New York before it sells off. And this is the origin of the move here where we had this really big pump as well, as it was here, as it is here. And maybe this here, was telling us that once we took out those London highs, that this was ready to be the reversal up here. All right. So time and trading is really, really important as well. So if it's something that you want to start factoring, find yourself a good indicator like that. All right. And once again, I don't have any association with this person, by the way. I don't know who they are. If they're listening to this stream or they have anything to do with it, thank you very much for making an awesome indicator. You deserve all the credit that you get. But it's KZ Daily TDOL. All right, take a look at that. And you can adjust these sessions here. All right, be aware that I think they already make the calculable adjustment for UTC for you. So you just need to factor that in as well. And then you can watch that and set that for your different kill zones. And if you don't want the middle bits in, you can just turn the middle off and it just gives you these really nice little bars at the top. All right. So I often use them when I teach, so I keep them on there. You can also just use some vertical lines as well, guys. All right. So where are we now? Well, for me, if we've come up into this fair value gap, right, we want to understand where the draw is for price. Quick question here. BC, do you only check on the 5 minute for those entries? No, so I'm using the hourly, then I drop down onto so I'm using the daily to set my bias as much, then I drop onto the 1 hour. I'm using the 15 minute for market structure, right? So I want to see breaks of market structure on the 15 minute, and then I'll cycle through the lower time frames, 5 minute, 3 minute, 1 minute, right, to find those entries. I want to make sure that I kind of maximize that. I'll either take a breakout, which I call like the breaker or my breaker line, which is basically we're looking for a sweep of the lows, close above the high that swept the low, right? Let me draw it out for you quickly because it will make a lot more sense, right? So for me, I'm using one of two entries. I normally enter on a fair value gap, right? But if not, what I'm looking for price, yeah? Now, if this was for a bullish entry, we'd be looking for this, right? We'd be looking for price to come into our level, sweep the level, get back above, yeah? And then on the retest of the high that swept the low, I'd be placing a limit order on here to take that on the break. However, you very often get a fair value gap in these type moves as well, down lower. So I'd be looking for that, all right? Now, in terms of if I'm looking to short, I want to see price come into a level. Yeah, take the liquidity, retest what I call the breaker line, but it's basically like the market structure break line. And then that's where we'd be looking to go short. Either that or again, if we have a fair value gap back here on the lower time frames, we'd be looking for price to pull in to that, all right? So I'm using the 5 minute down to the 1 minute for entries, all right? But the hourly and the 15 minute is what I'm mainly using in terms of structure, all right? So if we're looking at this on the 15 minute, for example, then what I'm interested in here is you see where we've had the breakdown of this move, yeah? Now, for me, I'm saying to myself, okay, if I lock onto the bottom of this and then take it to the highs of that move as well, what we can see is while we're up here, we're in a discount for shorts, but we're in a premium for longs, yeah? So now what we're saying is as we're coming into our over our time frame, right, and we're looking for entries, if we've still got a bullish bias here, yeah, and we're saying to ourselves, okay, on the daily, I think we've still got move to go up. We've still got room to push higher into this fair value gap, right, to fix this imbalance because we've not really come too far into it. The other side of things that we've got is we take a look at the DXY. What's that doing? Is the DXY starting to pull back? Has that lost a key support level? If those things start coming in and we've got a higher time frame bullish bias, then we're again waiting for the right kind of time of day to find our entries, which we can see we're in here. Yeah. So now we're saying to ourselves, okay, well, what's the London session done? Yeah. Let's look at the London trading session here, which I'll use this indicator to pop that on for you. Yeah. So the main London trading session that's taken us through to here to 1 o'clock, we've got our low, we've got our high of London, right? Up here. So for me, I'm saying, well, maybe price wants to come down and run the lows of London. We're in a discount here if we want to go long. So if price comes down and takes out this low, as we discussed, yeah, and then we get back above it and we start to look to trade higher, then we can look for long entries down here, right? And we've got a clear target above here, yeah, the price is coming into this liquidity, and then we've got our main target up here. But then as we zoom out and we go onto the higher time frames, we can see that we've got further targets above there as well, all right? However, if the bullish pressure ensues and we continue to break down, then this helps us and allows us to stay out of trades, right? We don't want to FOMO into anything. Often if we see these big impulsive moves like we get here, very, very often these moves can be retraced, right? Now, when we retrace these moves, right, we can use this fair value gap that was created here as like a breaker, yeah, and say to ourselves, well, we don't want to see price close below that, yeah. Now, what happens when it does? And let me just get rid of these very quickly as well. I'll pop this one in first. But we look at this fair value gap here. Now, remember when you're thinking back to your support and resistance, yeah? And you're saying to yourself, okay, what happens when we lose a level of support? Yeah, if it retests, it turns into resistance. So this fair value gap here, we've rebalanced this, yeah? Now price has tried to get back above it. It hasn't. It's swept the liquidity above these highs, has now broken down. We're retesting the underside of this now, something that allows us to play into our thinking of, okay, this was the origin of the market structure break. So we're moving into that now. If we're retesting this and starting to break down below these lows, then the chances are we're either coming down here to the bottom of this range to take liquidity, or price is looking for an extended move to the downside. All right. Really good question here from Boov, is it? Boov? Good question, bud. Let me just put this on. Curves UK, hi from Devon, you legend. Love a bit of Devon. One of my very best friends lives in Devon. Has a great life. Got the kids down there, surfs every day. There's Bude and Croyd and all these places around there. Just absolutely stunning part of the world. So, before I digress again, Boov, good question here. Do high time frame fair value gaps have precedent over low time frame ones? Absolutely. So, what we're looking for here, let me leave that up actually. So, what we're looking for here is when we're in a move and we're managing a move, yeah, we want to be looking at these. So, for me, in terms of managing the structure, right, and how we're looking to move through the market, I'm using the 15-minute as my lowest time frame to take these, yeah. So the principle is, if we're looking at a breaker, for example, what we're saying is, you see we have this impulse move here, right? Price moves up, we get this first down candle. That's our first breaker. Price doesn't close below that, right? Now, price then moves up, and then we get this down candle here, all right? So we say to ourselves, we mark this candle up. We don't want to see price close below that, right? Helps keep us in the trade, right? Because otherwise we start to panic a little bit, or we don't. People start to panic. Come up here, come down. All of a sudden, they've got out of their trade here because it's broken structure to the downside. And then they watch the thing moon. Look at it more in terms of saying to yourself, look, if there's orders in here, if these are the orders that are pulling back before we have continuation, it gets retested, this should act as support. If we break down and we lose that, yeah, like we're in the process of doing over here, if we then break down and we start coming down below, then we know it. Now, this has been based on a fair value gap, which we've now seen filled, right? So if we want to be talking realistically and saying to ourselves, okay, well, what do we want to hold here? We want to really hold this breaker. Yeah. So we've got this, or like an order block, right? So we can see that as we've broken structure down into here, this down candle is the last down move before price has moved up further, right? Now, we've got an inefficiency here, a fair value gap in the move higher, which adds a little bit of weight to the order block as well. And now we've come back in, we've retested this area, and what have we said, right? Remember what we're discussing. We're saying to ourselves that if this is our range, which it is, we know we're now currently in a discount, yeah? We've come into a 15-minute order block, yeah? And we would dive into the other timeframes as well to find the most valid order block where this doesn't wick below. But we can now see that price has run this low, right? Let me just make that a bit clearer for you guys to see. So price has come down and taken out this low, right? Interesting. So then, if we move on to our executable time frame, and we can see we've had our liquidity sweep down here, right? And we can see the high that's taken the low. So now when we're looking in here, we can see this has come up, yeah? And we've not really got an inefficiency in here. We can drill into the lower time frames as well, right? But as price comes down here, now using it from an executable point of view, yeah, if we've got our high time frame bullish bias and we've seen this move, we've come down into the order block, price is telling us here that it's looking to move higher. What we would want to see in this market structure shift is I would want to see a more powerful move through the market structure. Now, price could very well have just filled this order block, the fair value gap, sorry, here. And now we could be looking to go higher. So if we were looking to scalp this, well, we've got a really clearly defined risk because our stop loss can go under this, right? The origin of the fair value gap. Or, and we've got really clear upside targets into these highs here and up into these highs, right? So when we know we've got our bullish bias behind us, then we can start entering in, right? Now, the reason here I would have wanted to see this really kind of punch through this level just a little bit more aggressively, right? Same way as if we were to get the shift on the 15 minute, yeah, taking in this higher, these are just kind of getting a little bit rejected here, yeah? So we just want to wait, maybe get that big punch through, and then we look for a fair value gap in here. Yeah, so let's say we get this big aggressive candle that comes up here, and it leaves us a nice fair value gap in here. We would then look for a pullback into that, target one up here, and then target two up here. And that's how we would look to scalp that, all right? All just based around market structure. So before I waffle your heads off anymore, shall we look at some chart requests? And sorry, Boov, to just answer your question in more detail, absolutely. We take the fair value gaps from, for me, I look at the weekly and the daily when I'm looking at the structure of them. So I'm looking for those as being like the key target, the key lure. And I'll show you this in more detail when we do, when we run through a couple of alts in a moment, all right? Because I'll do a top down for you. But that's what I'm looking for there. I'm looking for the daily and the weekly to be the real key things to say, okay, where's price ultimately going to look to rebalance? And then beyond that, I'm then going down onto from my weekly to my daily for those, and then onto an hourly, right? But then I'll factor in the 15 minute as well. The ones I'm using on the 5, 4, 5, 3, and 1 minute are for entries. Yeah, so like we would look at here if price is coming into this one there. All right, bud. So I hope that makes sense. But again, I'll show you this or hopefully demonstrate it in more detail when we're doing some top downs. All right. So let's have a look. So what chart requests we got, guys? Vatsel says ETH. No problem. We can definitely take a look at ETH. That one should be pretty straightforward. Imran Khan, I believe you had some suggestions earlier, mate, that you wanted to look at. I think there was a couple, and I know someone else messaged me earlier asking for VET as well. So if you're on the stream, guys, and able to comment, do let me know. We'll take a look at a couple. We'll start with ETH, and then we'll take a look at some more as they come in. So let's find a brand new ETH chart. Yeah. And then let's use a Binance one. Let's have a look. What have we got? Yeah, that'll do. ETH or a Bybit. Let's use a Bybit one. I like Bybit. I like Binance as well, but let's take a look here, and hopefully we've got a nice clean chart. If we haven't, we can just delete everything. Yes, Imran Khan. There you go, mate. That's right. You did XAU and GBP/USD. We'll definitely cover one of those off for you. And then, Matic and Sushi. Which one? Which one, buddy? Pick one. Pick your favourite, and then we'll do those. We'll do those three. We'll do gold, ETH, and then thingy. Do I have a Twitter? Yes. Sorry, guys. I'm so terrible at plugging this. It is. It's BC_Richfield. Yeah. So let me just type it in the chat if any of you guys are interested. You can pop over. I do post a lot of stuff on there, and will post more. There you go, guys. And Sushi. Right, okay, guys. So we've got our three. Now, what I want to do here is I want to spend the next 20 to 30 minutes doing top down on all of them for you. Hopefully I can get it done a bit quicker than that. If you haven't got that long, I do apologise. I do like to make these sessions a bit longer on a Wednesday so that we can really start looking. Oh, and look at that rip. Wow. So that was an impulsive move lower, right? But look how that's just been bought up. Nice. Yeah, there's a bit of volatility kicking about today. We've just had the ECB announcement, all right? So see what that comes out at. In fact, I can look at that for you now. That should literally be being announced now. So this is the ECB, European Central Bank rate decision, all right? So what have we got? So release is, given the unexpected and extraordinary rise in inflation, it must be recalibrated to ensure that it is consistent with the broader monetary policy normalization process. So that's basically put the wind up the market. I think we got a 75 basis point hike. Vatsal, yeah, brilliant. Exactly that. 75 BP. So that should have been priced in, guys. we could maybe see that pump starting to happen now. Well, in fact, there you go. So what we've seen here, and you need to be careful trading these news events, right? Because we see these big Darth Maul candles, right? Now, what we can see here, you notice that cheeky little push lower that we got, yeah? Now, if the theory is correct, then what we've seen here is this period of accumulation. Now, what we're doing is the market's got a bit more confidence about it. It's going to come down, take any low side stops, any sell side stops that are down here, right, before it then breaks out and goes higher. However, that doesn't really interest us at the moment. I don't particularly like trading news events. What I want to share with you guys is how we can have and set high probability higher probability trade setups. And I'm going to show you a top down now across 3 different assets. All right, we're going to use ETH, gold, and then we're going to use sushi as well. All right. Also, don't know if any of you are also keen on this, but I absolutely freaking love this dinosaur that TradingView have added to the charts. I'm an absolute massive child. I love dinosaurs, as you can probably tell by my logo. So before I digress any further, when I'm on a weekly chart, yes, I'm interested to do a zoom out, right, and cover the high time frames as well. Yeah, as in the high time frame levels across. But really, I'm interested in the recency. Okay. So as we're looking in here into price, let's take a look at what we've got. Price comes down and sets the low, right? We then set a lower high, right? As price moves down into here, we're clearly finding support in this region, yeah? So what we can do on a weekly scale, for me, the candles mean everything, yeah? So as we're coming in here, we get this doji candle showing us that there's a bit of indecision here, all right? Now, we could be looking at this as a weekly order block. What would give this extra validity is the fact that it's at the lowest point. What else is nice about it is we see price take off, and as price takes off, it leaves us with a fair value gap. Okay, so we see price come up, comes back down. This candle doesn't come down and rebalance. So that's where we get our fair value gap. We can see again, price comes down in to rebalance that. But we're also coming into an order block. Now we can see here when we take this liquidity, right? That's our first point of interest here. We've taken liquidity here, and now price has started to move higher, right? So what else do we want to see? Never forget your candle patterns, guys, or your candles themselves. They tell us such a story. We've got our bullish engulfing here, right? It's because the body here is in line with that on the open, and it fully engulfs the body. I'm interested in the bodies because that's where the volume of trading is, all right? Then what we have here, if that isn't enough to get us bullish, what we would want to see here, by the way, for the next week is we want to see price open, trade down, right? And then come back up to within the range of this candle, which would then get us bullish, right? Because we've taken out liquidity of these lows, we've closed back higher. If that isn't enough for you, then this bullish engulfing candle here should have been, right? And that should be saying to us that when this week starts, which was the start of this week on the 24th, that we are bullish, right? So let's just put a marker on that quickly. Start of this week, in fact, we'll do a vertical line, right? So from the very start of this week, Monday the 24th, we are bullish, right? We'll just mark that with a green line. Now, we go on to our daily chart. And what do we want to see down here? When we're looking at days on candles, yeah, first of all, we want to nip back and we want to say to ourselves, right, what's drawing price higher? So first of all, we have weekly sell side liquidity up here. Right? And I'll go through the next ones a bit quicker, guys, just doing this so that you guys can fully understand. And please do feel free to ask questions as well. All right? Now, the next thing that I'm conscious of here is this fair value gap, right? So this is on a weekly scale. We'll do that in darker blue. And I'm also aware of this fair value gap here as well, right? These are inefficiencies in the market. This is where we believe price is getting drawn to, right? And we'll do this in a lighter blue. So price has come down here and it's taken out these lows, right? Now, on a weekly scale, remember we've drawn this green line because this is after our bullish engulfing candle, and we've now got a bullish bias because we've broken down into this order block, yeah? We've had our bullish reaction, and the other thing that we've done here as well, we've set our low, set our high, come down and set this low. Now, as we've broken this high, oh my God, you know what? I do this so often. I hit the space bar instead of the command bar, and then it moves me onto another chart. Give me 1 second, guys. Trading view's been really slow today. Let's have a look. Or maybe it's just me overloading my computer with a million tabs open. So basically, while this is frozen, no, here we go. Perfect. So we're on this one, the lower one. Right? So on a weekly scale, we know this is where we're bullish from. Yeah? So we've taken the liquidity down from this side. We know price is getting drawn up. We're saying, okay, where's price drawing to? It's drawing up to fill this inefficiency. Yeah? So then when price is drawing up into this inefficiency, we're saying to ourselves, okay, what else have we got before this happens that would give us confirmation? Well, make sure I don't hit the bloody space bar again. We've got our market structure break, right? So this is showing us that the market is now ready to go higher. So we've now got confirmation here, bearing in mind again, remember what we're saying about how price is delivered, yeah? So this is here, right? Smashes up through this level, yeah? So nice impulsive move up. So this is what we're interested in. This is what gets us bullish. So now we can see up here that price has been drawn up to this level here. We've come up to this inefficiency and we've now filled that inefficiency. So now we're saying, okay, if price wants to move even higher than this is the next viable upside target. And obviously we're still bullish here. But something I'd like you guys to consider, which is something that I don't see a lot of people do or certainly speak about, that is when we're bullish, yeah, and we've broken structure to the upside here, what we want to see is when price opens, so see this one here, price opens down here, yeah? So price opens here, let me zoom in a bit more. So we don't trade this day because price opens here, yeah, goes higher and then goes lower. Well, that's no good to us. That's showing there's a raid on the upside. This is the buy side liquidity and price is moving lower. We don't want that. We've got a bullish bias, right? So we're looking for the opposite, which is this. We're looking for price to trade below the daily open, right? So let's mark this on here. Here's our daily open. Right? We want to see price trade below this. Then we get our long entries in down here on a lower time frame when we break market structure to the upside. Let's have a look. Sorry, a couple of quick questions. Lorenzo, I'm a bear today. Okay, cool. Mladen, that's who texted me on Twitter. Well done, mate. VE chain. So yeah, we'll squeeze in vet at the end as well. No problemo. All right. So here we go. Now we're seeing that. We're waiting for price to trade down into here, yeah, before moving higher. So what have we got? Our high time frame bias tells us we've just dipped into some sell side liquidity and price is now ready to move up. We've got a weekly bullish engulfing candle, which closes here, at which time we've also broken market structure to the upside on a daily scale, all right? And then we're looking for price to pull back below the daily open to fill our entries before we move higher. So now I move down to an hourly, right? So once again, this is our confirmation of market structure break. And again, remember, guys, I know I keep waffling on about that, but it's really important. Look how aggressively price broke through that level. Yeah? See that big, powerful, impulsive move higher. That's telling you that price is ready to move higher, right? So we've had that. Now what we have is the mitigation, right? That's if you believe this move is manipulated or created, yeah, this punch above, then price is coming back down here to levy off those orders before it then moves higher. So even on an hourly scale, you can always make the argument that even if you entered here, right, there's your fair value gap. What would you do? You'd wait for price to come back down into here. We drop into a lower time frame, wait for our market structure break, and that's where we enter. All right. So we've now got that area marked out in blue. So what else did we say? We want to see price trading below the daily open. Yeah. And this is where we're getting our maximum value. Now, I do use lower time frames than this, but I'm very, very conscious that most people, especially people that kind of follow this channel and that, don't or aren't able to have that kind of access to the charts, because you need to obviously be able to dip in and out of the charts frequently when you're trading, the minute charts. So the 15-minute, our targets remain the same, our bias remains the same, but the 15-minute is often a lot easier for people to access, right? So what are we looking for? We're looking for our raid on liquidity, right? Do you remember that? So we want to see a low swept, yeah? Which we get here. So this is our sweep of the lows, right? That's the manipulation. That's designed to make it look like the market's ready to go lower, yeah? Now, what do we have here? We've got our break. Price comes up. There's our high. Higher low, right? This then provides our market structure break. Right? Now, remember again, and I know I sound like a broken record, how price moves. It's the power that price moves through that level with, yeah? It punches through it aggressively, right? Because when it punches through that level aggressively, right? And there's two options you can take here as well. You can wait either for a close above this high and a retest of this line, or for me, I really do like to trade these fair value gaps, right? And let me make that orange just so it stands out a bit more, right? So then you can take your entry on here. You can put your stops below the prior swing, yeah? If you're in the midst of a really impulsive move, I'll teach you in later sessions how you can utilize the fair value gaps as well, right? In terms of the candles. Now, we've entered here. We've got our stops below here. So long position. We won't cherry pick. We'll say we took the very top line, yeah? Now, we want to make sure that if this is our low-hanging fruit here, and price has any intention of reversing when it hits these highs, that we've got at least a 1-to-1, yeah? And we've got a 1.6, yeah? So we're happy with that. However, we can see as we're monitoring price, we get price take off here, lovely, big expensive move higher. When we break that level, we move our stop loss to entry. Or we don't, I do, right? And a lot of people are against that, right? But for me, it's worked well over time. We move our stop loss to our entry. That way we're risk-free, yeah? Now, I wouldn't even be looking to take profit here because how the price is moving. Look, it's just aggressively moving higher. Then all I'm doing on a 15-minute basis is I'm using these as breakers, right? Make this another color. And what we're saying to ourselves, let's make this green. We're saying to ourselves, these should be supporting price, right? We've got our ultimate target here because this light blue box, if we remember, is our high time frame fair value gap. So this is our ultimate target. This is where we're taking profit heavily, right? But then all we're doing is on the way up to manage the trade, again, we're just looking at these. See how price dips into it, then it moves up higher, breaks above it, dips it, moves up higher. So all we're doing is we're making a note, and I used to call these first obstacles, the same kind of principle, right, or breakers. Now, again, what you're saying is if price starts closing below this and we lose them, we're losing structure to the downside, that's when we would look to get out of the trade, yeah? But as we can see, as we're coming up and we're setting these original ones, we're not breaking down from them. These ones support price here as well, right? But then when we set these ones here, right, price still isn't quite breaking down below those yet, right? But if it does and it holds, that's what gives us our bearish bias, all right? So that's what we'd be looking for. So I hope that makes sense on ETH. All we're doing is we're just taking our higher time frame levels, yeah, and then we're using them to decant down into getting our bias. And what else you'll notice as well, guys, as well, is obviously that these entries here are taken within our kill zone, yeah? So our entry here, right? Even if you're coming back to this point, you can just wait for this. So let me just show you that. See here, right? London, take the sweep, New York, sweep again. So you can take that and just make sure that they're within inside your time periods for execution. So a couple of good questions here, actually. So would that filled fair value gap have impact on price in the future? So When we're looking at a fair value gap and we want to either utilize it as support and resistance, typically what we would want to see in close proximity to it is buy side or sell side liquidity as well. And then that can add a little bit of extra, like you would do with an order block, for example, right? So if we've got an order block there, when we flip an order block, yeah, let's say this was an order block, for example, and it's been acting as resistance. When we then flip it, we expect it to act as support, all right, like this is doing here with the fair value gap. And then we would look to move higher, all right? And then how do we enter a trade when there is a run? So it's important that we don't want to FOMO in. If we miss our entry and price goes, that's fair enough. However, let's take, for example, a situation like this, right? And we've missed this pump here, but we've cleared out the highs that we thought could reverse price. And now price has hit a consolidation patch here. What I would be looking to do as a breaker box, yeah, as I would call it, or a breaker as ICT would call it, or as a first obstacle here, I would be looking for price again to have a bullish impulse move above this, and I would put my entry on the retest of this. If I'm correct, my stop loss goes under here, yeah, because it shouldn't violate this, and that's what allows us to get in. I wouldn't be so keen to enter here. I would still want to see this within my strike zone, yeah. And the other reason for wanting to enter here is we've had a big point of compression and we've got a very clear upside target, right? So we believe that the draw, the magnet for price is still to the upside, all right? But again, if we do see these big pumps sometimes, then sometimes I'll just sit on the sidelines and I'll wait to see what happens when we get to our target. And then when we're up here, we're saying, okay, we're seeing sustained pressure because we've come into that here, yeah? But now we've pulled back. Now as we come into the London session, I'm always asking myself the same thing, right? Which is, if we've still got our bullish bias here, which we could have, yeah? Have we run lows? Yes, we have, right? So we've run these lows here. So we're in our London trading session. Obviously, this would be done on a lower time frame, right? That would be the sweep. This is the origin of the move. So that's the high that swept the low. This becomes our breaker line, sorry. And what we can do is we can use that to enter a limit order on. Price closes above, retests it here, yeah, and then we get price sell up higher, okay? So again, as long as we're acting within our strike zones, yeah, and you can obviously trade Asia and bits and pieces. Well, I know I've got some fantastic followers from all over the world. You just want to understand how price moves within your sessions, all right? And then it gives you a much higher likelihood of catching the move within those. And also as well, we need to remember, it gives us time away. It gives us time at the charts to chart out other assets. It gives us other time to go back and start to learn as well, all right, which is also so very important. So a couple more to run through, which I'm going to do a little bit quicker. We are going to look at gold. I think I've still got that on here from last time, actually. Let's have a look. Here we go. So same thing for gold, and on more traditional market assets like this as well. You can go back even deeper, start looking at monthly charts as well, right? Because again, from here, we're looking at the candles. Now, first thing that stands out to me here on a monthly chart is there's two things. There's these relatively equal highs, yeah, which I just consider and bracket all as EH, yeah, which are equal highs. Don't really know where that's gone. That is interesting. Not really sure why that's not showing up. But let's just imagine, shall we? Or I'll just draw the line there anyway. We've got our equal highs above here, right? Now, the other thing that I'd be really interested in, as price was coming down here, were these equal lows or relative equal lows, yeah? So when price is coming into a key area of liquidity like this, we're saying to ourselves, okay, if price is going to reverse here, have we left any clean upside targets? All right, we can't see any particular fair value gaps here, yeah? So now we're saying to ourselves, okay, is there anything that's going to be a draw for price coming lower? Well, we would expect these kind of relatively equal lows here to be the lure for price down lower. But bearing in mind, this is on a monthly chart, right? So we're expecting this to take place over a long period of time. Now, when we switch to the weekly, okay, it must have just been that they didn't have it shown on, it must just be turned off for monthly, sorry, on visibility. So let's label these up, equal lows. So what we can see now is price is kind of running into this area. Yeah. Now, if we think that there's going to be a potential reversal here, and obviously we're looking at this at the moment purely on a weekly scale, right? We would be saying to ourselves, okay, well, here's our run on liquidity. Obviously, combined with the fact that we've had the run on liquidity of these equal lows, yeah. But this is our low here. So as price dives into this low, if we're now seeing a bullish reaction, yeah, we would want to see price come in, yeah, and then look to move higher. Now, obviously, on a weekly scale, we'd be looking for this high to get taken out before then a further retest and move higher. But, you know, we would obviously be considering this liquidity sweep here, but really what we want to do on the weekly is start having a look at the candles and seeing if we've got any indication from the candles that price is ready to move higher. Yeah. So we can see that we're in this kind of period of consolidation. We've run this low. We've tried to break above it. We've then had this bearish engulfing candle that's taken us down to the lows. However, one thing that we want to factor in here on a weekly scale is that we've taken out these lows. Yeah. Price dipped into this, had a big bullish reaction. We've now set a bullish hammer candle. So price could be ready to move up. Yeah. So now we drop down onto the daily. Here we can see this liquidity grab a little bit clearer. Price comes back up, retests this level. However, obviously on this time frame, we are still bearish, right? We're in a bearish structure, lower highs, lower lows. Now, if we're thinking about where is price going to run, I would have been much happier had we run sell side liquidity down here, right? Because for me, that would show us that we've come down, we've taken out any stop losses, any liquidity that's below there before we're ready to come up. This is just kind of like, you know, this is a less important low, right? You come down, set that, we can see the sweep. Yes, you know, it is a micro low, and then we've come down and taken this. But had we purged this out, that would have been really, really beautiful. But we didn't. We did have this big bullish move, though, back above here. Then when we've come into retest, like we said before, what do we look for? Opening candle, price to run the low, takes out this low. If it closes back above, then we trade the next day long, all right? But what else do we want to be aware of here? Are our fair value gaps, yeah? So what we're saying to ourselves here is this price getting drawn higher, yeah? Or is it coming down lower? And what do we use to test that? So on a daily scale, remember like we were talking about with our daily opens. So when we had price close here, yeah, which was on Tuesday, and sets our daily open, then we want to see price move below that and trade higher, right? Now today, if we're the same, what we got was different. We got our daily open here, price traded above it and now started to trade down. So today would be a no trade zone, right? Purely because of that. Because we've got an overall, yeah, micro bias here. Again, look at that big impulsive move higher, right? So we get our daily open. Weirdly, that was a little bit off, wasn't it, I think? Yeah, of course, because we've got a slightly different opening time here, haven't we? So actually, our daily open is here, right? So we come in. Here's our daily. What do we want to do? We want to see price trade lower. Yeah. What does price do here? Takes out these relative equal lows, which we'll just mark up here. Now, what does it do when it takes this out? It's now trading back above the daily open. We've had our market structure break. What have we got here? Fair value gap, right? Between here and here. Price trades into this. We then move on to our lower time frame. We've got our key high time frame target. Sorry, let me move that back a second. Actually, show you what our key high time frame target is, which is this high. What's this high? This is our buy side liquidity, right? That becomes our long target. So we now move ourselves down onto the 15-minute chart. Price comes down. Here's our market structure break. We're not aping in here. We're waiting for price to come down and fill this inefficiency, yeah, which also ties up nicely with this 15-minute inefficiency. Now what we'd be looking to do, right? And again, we would trade this on a lower time frame, right? But even on this time frame, what are we looking for? Even if you wanted to trade this on a 15-minute time frame, price comes down, sets this high. What do we get here? We get our market structure break, right? What's this telling us? This is all starting to confirm. We've got a bullish higher time frame bias. We've got a bullish medium term bias. We've now got a medium time frame target here of our fair value gap. We get our big impulsive move that breaks market structure, yeah? It then comes back down, dips into our buyer pool, starts to get people short because we've taken out these stops, yeah? Then price reverses. We don't want to FOMO in. We simply wait for our market structure break. We get this big impulsive move higher. Yeah. What do we want to do? We want to find the fair value gap, the inefficiency. And there's your entry. Spot onto there. And you would want to put your stops either below the origin of the fair value gap, which is 1, 2, 3 candles here. So your stop would go under here. Or I particularly like kind of more of the origin of the move just to be a little bit safer. So your stop loss would go under here. Your limit order would be set on there. Price breaks above, hits the limit order, and then look how powerful that move is, right? And then we get a really nice clean target. There's our entry. Stops below here. Taking off aggressively up here. 5.4R, all right? So that's what we would look to do with that. Let's have a look at where it currently sits, all right? Don't want to do everything retrospectively, do we? So where are we now? Let's clean this up, right? So we still haven't filled this, right? So price could still be coming down to fill this inefficiency. It could be bleeding down lower, right? But once again, when we had this impulse move here, for people that didn't want to de-risk here, which I don't understand, you want to take your profits where you can, right? And you're better taking profits little and often. Now here, when we came up into this level, we could have simply, even on an hourly scale, and we would have got even better at this on the 15-minute. We just look at that inefficiency there, right? And like we said, what does price do? It has this big impulse move below it. That's showing us that there's weakness coming in here. You can use that as a sign to scale out your trades. And don't worry, because if you want to get back into the trades, then you can just wait for those highs to be reclaimed. Yeah. Wait for price to break back above. Say it comes back above here. You know, it will normally chop around for a little bit, take some sell side liquidity, get back into a bullish structure, and then you've got an opportunity to enter here. All right. You can get back into it as long as you've got clear upside targets for it to run into. All right. And your risk to reward makes sense. So I hope that's clear on that. What am I looking for here? I'm looking for the reaction as price comes into this area. Do we fill this back in now, right? Or is price not ready to go that way yet, right? Because we're Wednesday now. Where are we here? 1 o'clock. We want to look, price opened here, did that perfect move below and then pumped higher. Beautiful move. Where are we today on Thursday? And actually, we got the opposite here, right? Price opened here, moved up, closed below, and is now selling off. So for me, I'm watching this area here. And let's see the reaction that we get down there. All right. So that is gold. I hope that's made sense, guys. We've got gold there. We've got ETH ticked off as well. We've got a couple more to which we're going to rip through here. Poeta, hey buddy. What's the name of the indicator that shows New York and London sessions? Thank you in advance. You are very welcome. It is KZ. Let's have a look. KZ/daily/ TDOL. All right. There's only one on there with that description, I think. But if you're struggling, drop me a line on Twitter or over at the Nest, and I'll find the maker of it as well. And actually, I should find the maker of it because I use it. And people like this that really take a lot of time to make these indicators, right? So it's by this legend here, NKYIMU. All right. But then when you click on it, it will come up with the same thing that I've got up here, which is your KZ daily TDOL. All right. Hope that makes sense, bud. Very interesting session. Thank you, Imran Khan. Always a good supporter of mine, Imran. I like you a lot. But no, honestly, guys, if there's things you find valuable in here, if there's things that you feel I'm going too quickly on, if there's things that you'd like discussed or explained differently, or if you just want me to hurry the hell up, I do try and keep these sessions short, but I do end up waffling quite a lot. So that's where we are with gold. Let's quickly run through sushi, right? And then we're going to take a look at that as well. Yeah. So sushi, very similar. Let's just get rid of all of this jazz. Like starting with a naked chart. So again, we're back onto a crypto asset here. So very often there's no point trying to chart a monthly. Monthly candles do give us a lot of information though, so don't discount it. But in terms of what we've covered today, let's stay with this. So what am I looking at here? Right. So we can see here, just even judging by these candles, right? We can see here that we're finding support. Now, very, very different ways of drawing that, right? But you could do something like this and say that, okay, so just allowing from this wick here that stopped the market down to our actual low, we can see how price keeps kind of dipping into this level, all right, before getting bought up and going higher. So we've got that as our kind of pseudo support level. So let's do that in like a dark green, yeah, so we don't mess around with our colors. Now we've got that, we're saying to ourselves, okay, what's price doing, right? Have we got any bias here to have? So when price ran into this level, we had this fair value gap that got filled, yeah? Now we've got no inefficiencies here until we do this breakdown here, right? So then we get this fair value gap, which gets filled here, yeah? And again, as we see when we move this forward, do this one in blue. You can see once again, like we're talking about here, see this? This would be our sell side liquidity. You see how this lines up with the top of this fair value gap? Even though this fair value gap has got filled here, where we've got this buy side liquidity, price comes up, breaks above, and then it acts as support. Yeah. So for someone earlier that asked a really good question about that in terms of fair value gaps, if we've got the buy side liquidity, yeah, which we would have here, yeah, then as price comes up, we can see how that level's acting as support and price just keeps getting bought up there. All right. So once we come up here, this also offers us a very important bit of information because this is our market structure break. Yeah, from this higher, price comes up, break structure. Then what do we want to see? We want to see the open, price trading lower. We want to buy down here when structure shifts, and then we want to trade it bullishly. Yeah, price opens here, trades up, and then goes down, so no trade day. Price opens here. What does it do? Trades down. We wait for the low time frame bullish structure to build, and there's our entries. So that's what we're interested in on a weekly scale. Moving to a daily scale. All right. What we can see here is that market structure break. Yeah. So we can see here, price is trending down here, set this, come up, set the higher low, break above. Now we're bullish, right? So what do we want to see? Very, very similar on any time frame, right? What have we got here? Fair value gap. Just make this orange again or something so it stands out. What does price do? Big impulse move, powerful move, comes up, takes out liquidity with power, tells us the market's ready to go higher. What do? We want to wait patiently, yeah? We want to trade back into our entry zone here. That's where we start to get interested. Now, the other thing we need are upside targets, right? So we've got the liquidity sat above these highs, yeah? Now, these aren't relatively equal, but these are. So we want to be conservative and we say to ourselves, okay, let's have that as our main target, which we're just going to do in a green line, do it nice brighter green. So now we know we've got a couple of things. We've got a higher time frame lure on price, yeah? And then beyond that, we've got this secondary target up here. That's where we believe price is looking to go. So now we can drop down onto our hourly. We can see how price came into this target really nicely here. So what are we looking for here? On our hourly time frame, we've had this impulsive move higher. Then price has started to break down here. So what are we looking to do? So we're looking for our entries, right? Obviously within our kill zone sessions, right? So if we're looking for our market structure shifts, then we're looking around here, low, high, low, market break structure when it goes here. So on an hourly scale, this has got interest for us, right? Because we're saying, okay, we've got our structure break. And again, look at the powerful move that goes up there. Look what else we get. Just like magic, we get our fair value gap. Yeah. And again, because this is on a lower time frame, let's make this a different color. Let's make this aggressive green. Yeah. To show our hourly fair value gap. Now, price has come up, traded back into here. What do we get? Long opportunities. Where to? These highs, yeah? That's what we'd be looking to take out. So price comes up, doesn't quite get there. Probably would have got us in enough. Let's have a look how far forward we are. If we pop replay on, let's see what we would have got out of this one. We want to drop it onto our 15-minute time frame as we've been doing so that we stay consistent. Price drops into the level here. Yeah, what are we looking for? We're setting the high. We want to see a break of that high. Price gets broken here. We then want to trade down. Where to? We want to look for a fair value gap. This is obviously if we're not dropping down to a lower time frame. Remember, guys, we had this big move down. What does it do? Fills this inefficiency, comes into here, right? Now, our aggressive entry, because we'd want to hunt this on a lower time frame, see this, right? And we get price come down, come into here. As we get a structure break in here with this big impulsive move higher, we could trade it down into this order block. That would be on a 5-minute chart. So let me show you that. So remember, 5-minute, our executable time frame. Here's our market structure break. See that big powerful move to the upside? Where do we want to enter our long positions? In the fair value gap here. Let's do that pink. Right? Price comes up, takes out this high, right? Breaks market structure. We wait patiently with our orders on here. It retags it there. Stop loss goes below here. Yeah, the origin of the move, or you can be more conservative and put it down here on the swing low. And now as we're looking for upside targets, we were originally targeting up here, right at the top of this move, which is a wonderful 13R move. Now, what else would we be looking for in terms of trading into this? We'd be aware of this consolidation here. Price had a big sell-off here. Something held up price, all right? So I'd be looking in and around this level for a take profit one, yeah? Or the other thing that I will do as well is use Fibonacci extensions. I won't go into that now, but you take it from the low to the high of the move and where the entry for the move is. Oh no, I will cover it because I did cover it earlier, right? So origin of the move to the high and then the origin of the move up. And again, yeah, you target, normally your first one is your 1-for-1, which we can see we hit there really nicely, came back down. But then this 1.618 often aligns with a high side target as well. So we would have had two opportunities to scale out of this. However, if we'd held into this and we see this big impulse move higher, deleted the wrong thing, hang on. Then we also get an opportunity to get out of the trade when market structure breaks. Yeah. So remember, like we've said before, we're looking for these down candles. Yeah. These should be acting as support. So the move comes up, sets this corrective move, moves back higher. Market corrects into this, doesn't go above it. Then we set this one here. We don't break that. Market goes up again. We then set this corrective move down here. Market comes into it, starts to break below it, and you can get out here. You've also got your market structure break here. And if we look at this move, just so that you know it's not all just mumbo jumbo, even on a low time frame, we had the clues there. Here's our market structure. Here's our, liquidity sweep. There's our break of structure. Yeah. Impulse move through it. Where do we order? We short the market here in this fair value gap, stops above here, and that's where we would currently be. All right. So I hope that's cleared up sushi as well, guys. Hey, Three Musketeers. Hey, bud, very late, but I like what I hear and see. Great TA. Thank you, mate. Good to see you on the stream. This will be available on video as well. So, if you've got an hour or so to kill at any point, then absolutely crack on. So we can see here how we had that move. We came back into our key area of interest and now price is pumping higher. What are we now watching for? Well, we're looking for a reaction around here because we've run into that liquidity, right? But we're now making a move at this and we can see we haven't managed to quite close above that yet. Where would I be looking at next? In and around this area, right? That's where I'd be looking for a reaction. And what would I want to see? If I'm feeling that the market is going to be turning bearish, yeah, then I'd want to see something like this. I'd want to see those run. I'd want to see price break back down, take out the low that swept the high, and then I'd be looking to trade this back into these kind of levels down here. All right. So I hope that's made sushi nice and clear. And then just one more, because I did promise it, to a fine person who messaged me on Twitter earlier with a request, which was for Vet, wasn't it, buddy? I believe. Let me get Vet up anyway, and then you can correct me if I am wrong. Here we go. So this is going to be the last one, guys, and then we're going to call it a day. So I really do appreciate all of you that have stayed and for your patience. Thank you very much. I like to extend these sessions a little bit. Just hope it, teaches you a little bit just about how I, just how I look at the market, right? So Vet, awesome. There he is, Mladen. Awesome. So here we are, just purely on our candles, right? And what we're looking at. What have we got? These downside wicks here, we see these clusters of them, right, are telling us that there's buyers below. Okay. On a weekly scale, where could price be trying to get to? Again, we just want to look for our fair value gaps for starters, which we've got one here. Now, what color did we put that in? I think we made these blue, didn't we? Fine. So let's say the blue one is our weekly. Yeah. So price has come back up into this level. Once again, guys, let's look. When we had this big drop here, we got something very similar, right? Price came into this. Yeah. Came up into it, tweaked away from it, but then eventually it did fill it before it reversed. Yeah. So now we're looking for something similar here. And I think this is what's drawing price higher. Yeah. On a weekly scale, that's definitely what we want to be aware of. Okay. And we can see down here as well, we've got key sell side liquidity a little bit lower, but we're going to dial that in on the daily. Okay. So now we're down here on the daily. We can see that that's the weekly fair value gap that we've got. Price has then kind of shifted away from here, and we've gone into this bearish market structure, setting lower lows, lower highs. We had this run on liquidity here that then sold off pretty quickly. Where are we interested in here as well? I think this was definitely pulling price higher up here. So let's make that a lighter blue to represent the fact that that's a daily. So this is what we're saying to ourselves here. Okay, if price isn't breaking down here, we can see when we come into these lows, all we're doing is price is just getting bought up. All right. So we're going to mark our key daily sell side liquidity. Okay. And then the other thing that we like here is really our kind of buy side liquidity is here, which is pretty much dead on this line. So at the moment, it's too late to long, in my opinion, because, we're heading straight into this possible area of rejection. But what I would say is, in terms of upside targets, we haven't filled this. So that's going to be a magnet for price to move higher. All right. And then this one here, as we're moving up, I think what I'd want to see here is price kind of come into this. Yeah. Come above it, test it, and then move higher. Because like we said, right, if we've got buy side liquidity here around a fair value gap, we'd be looking for this as to flip to support. Yeah. So we could probably get some nice entries in here and have a pretty fast move up into this level. Now, it doesn't look like a lot, right? But this is obviously on a daily chart. So as we start to move a bit lower, we can really start to see. So we haven't run sell side liquidity down here. So what would we have been looking for? Now, we can see as we move down here, price has started to move up. Then we're coming down here, setting lower lows and lower highs, right? Now, our first point of interest here is always for a liquidity sweep. So we see liquidity get swept down here, right? Price takes that liquidity, and then remember our candles, guys, we get a bullish engulfing candle. Now, we would have to be entering fairly aggressively here because we'd have to be aware that price could very well be looking to run these lows, right? But at the same time, as prices come into this level and set that, we still want to be aware of other potential targets. So we're saying to ourselves that the lows have been swept down here. What else could we have looked for? Remembering that we need to test our hourly, and we also want to look at our 15-minute as well, right? So we didn't come into these key lows, right? However, what we may well have done here, if we drill into other time frames, is we could be looking at an order block here, right? The origin of a move that not only broke market structure, we had an inefficiency after it here. However, what we would do is we would drill into different time frames. We can see this is also the lowest wick. So there's always potential that price has come into this area here, found buyers, and then it looks to move higher. So what would we have wanted to see? We've got a really clear target up here. Yeah. We see that we've got this sweep down here. So as price comes into this sweep, we say to ourselves, okay, look at these long downside wicks. Remember that, guys, like we talked about before. So before we switch across onto our daily, onto our 15 minutes, sorry, what do we want to see? Let's remember, guys, we're in and around here is always the same. Always the same. On the 15 minute, we're looking again for our key high side targets, right? So here's our buy side on a 15-minute scale. There's our buy side liquidity, which is our upside. Yeah. And we know where our sell side is. It's down here. We got these relatively equal lows. Yeah. So we're saying, look, there's liquidity here. Why? Because it stopped price twice and it's got bought up. So what do we look for? We look for our liquidity sweep. And that gives us our first point of interest where we're saying to ourselves, okay, now we want to move to an executable time frame and then look if we're going to get our shift because we've got the sweep there, right? Let me just pop this on replay mode here so we don't have to cycle too far back. Now we can start on our 5-minute chart. Yeah. What do we want to see? We just want to see our break of structure. Remember, we want to see a powerful candle move through it though, right? Or a powerful move through it. So here's the powerful move through it. What does it leave us? Leaves us a fair value gap. Where's our entry? Top of the fair value gap. Where's our stop going? Under here. Origin of the move. I wouldn't put it here because it's just too far down. So I take the risk and put it on the origin of the move. Where's our target? Buy side liquidity, right? 5.7R trade. And we could obviously look left as well. We'd want to be conscious of any particular things that could turn price around here. So we'd move to a higher time frame again. You know, minimum really for me, fair value gaps, I'm looking for sort of 15-minute. So I'd be expecting us to fill these pretty quickly, but I would be aware of this. I don't think that would stop price, but at the same time, it's something you'd be aware of when price hits it in here. We reclaim it, and then we push up. And I think, okay, so you can hold out some of the trade here. See what happens? We close below it here. So you can start to scale out some of the trade here, which is at a nice 4R. You've got your stop loss at entry. You can let it play out again and put the rest of your position on the buy side liquidity just to see if it does go back up and if it tags that. And there we go. And then we'd be out of the trade there, all right? And we'd be looking at this point then for any key reversals. So look, guys, I know I've waffled on for almost an hour and 20 minutes. I see we're losing a lot of viewers towards the end there, but I do really hope that's been useful for you guys. Oh, I will take a very quick look at DXY for you as well, Vatsal. And a quick question here, a couple of questions actually, let me just read them out. So does a previous low that gets swept trump a new higher low couple of hours later with regards to what would mark the breaker line? So if I understand this right, so what I'm looking for, I'm looking to make sure that we're in a point of bias, yeah? So that we've got like we said, our high time frame bias and that we're entering within our zones. Then I want to see ideally a 15-minute run on liquidity, yeah? Then I want to see either on a 15-minute or a 5-minute scale a break of market structure to the upside, allowing me to step in. Then I want to pull back to the fair value gap, or like you said there, or I will consider putting entries on the breaker line like we did with the Bitcoin trade yesterday. I hope that answers your question. I'm not sure that I've fully understood that, Showman. I'm really sorry, mate. If I haven't, do let me know and I'll go through it in a bit more detail. And Darnock, PG Tips or Tetley? Yorkshire tea, mate. I'm sorry, it has to be Yorkshire tea. And as a very proud Londoner, that stings me a little bit, but those boys love their tea and they know how to make it. I could not recommend Yorkshire tea enough. Get yourself a little pot, right? Just one of those little catering pots like I've got here, just a little metal one, right? One tea bag, nice amount of water, good 5-6 minute brew, little bit of milk, perfect. You want it that lovely golden colour, absolutely beautiful. All right. So, guys, look, thank you very, very much. We had a load of people on the stream today, loads of people contributing, too many, in fact, to even read out, but you know who you are. Thank you very much. And thank you, everybody else that came on, and also everybody that watches this on catch up. Do come and grab us across the nest. We got some really cool stuff coming up and some really cool announcements coming up soon as well. You can grab yourself a free trial if you're not already a member down in the descriptions below. And if you've got any questions for today's stream, come and catch me over the nest or come and drop me a message on Twitter, and then I will be there to answer. So a huge thank you to everyone that joined in today. I hope it's been nice and clear. I'm going to be back again next Monday and next Wednesday. If you guys have any charts you want us to cover off, do let me know. And if you guys have got any setups or that you're looking at, again, drop into the nest. You can put it in chart requests, come and tag me in there and I'll look through them with you. All right. So have a fantastic week, everyone. Trade safe. Do remember to have your eye on the key news events that are coming up. It's quite an impactful market at the moment. And I hope to catch you guys around the nest.